Hello, good morning. You've tuned in to CNBC TV 18. You're watching Power Breakfast with me, Vinny Motiwala. Along with me is Mamakshi Ture as well. Mamakshi, a very good morning to you. Yesterday surely was an interesting day and hoping for one today as well.
Well, absolutely. When yesterday we managed to sustain about the 24,450 mark, so that's an important level to definitely watch out for. The broader markets also did quite well for themselves, right? The mid-cap index, small-cap index, everything was outperforming the benchmark indices. But today, lots of action lined up. And Vinny, let's get started with the top headlines.
Absolutely, starting with the top headlines and coming in from the Wall Street first. Now, stocks on Wall Street ended lower. The S&P 500 snapped a 9-day winning run as uncertainty on tariff deals weigh on the markets. The Nasdaq shed more than 130 points. Investors now await the Fed's decision in what will be the first since President Donald Trump announced reciprocal tariffs in early April.
Stocks in Asia opened largely higher as investors assess trade developments between the US and partner countries in the Asia-Pacific region. The GIFT Nifty is indicating a slightly positive start for the Indian market.
Oil prices hold steady near a 4-year low as OPEC Plus accelerates its output hikes even though demand outlook remains uncertain. Gold prices gain more driven by a weak dollar and safe haven demand.
And in key earnings, Godrej Consumer is expected to report a 7% growth in revenue with 4 to 5% domestic volume growth. MGL likely to report a healthy set of numbers, while the street is expecting a weak performance from HPCL.
On that note, first let's look at what the Asian markets are doing this morning. Yesterday, most of them were shut. Now, today we are seeing China that has reopened. They were on holiday for Labor Day, so they reopened today. We are seeing Hang Seng that's opened up with some bit of a gain as of now. It opened up with 0.2% of gain. Now it's come down and it's holding on to gains of 0.1%. Taiwan index very, very muted in today's trading session, just up 0.04 down. I beg your pardon, 0.04% is what we're seeing. CSI 300, that's the mainland China index also, that rose around 0.6% early morning trade. Some bit of a cooling off may have come in from that level. Other than that, today Japan as well as South Korea are still shut in trade, so keep an eye out on that. ASX 200, that's the Australian index, that is also seeing a muted day of trade, down almost 0.1%. So mixed opening to a muted opening is what we're seeing coming in for the Asian markets as of now. But let's look at what the GIFT Nifty is indicating. Muted start for the Indian markets is what we could see, but a slight bit of a positive bias is what we're watching out for. 6 points up as of now. Not much of an uptick there, but a muted start is maybe something that we are watching out for from the Indian markets today, Mamakshi.
Absolutely, and that is given that the handover that came in from Wall Street was rather tepid. In the US market, Wall Street ended lower after S&P 500 fell by almost 37 points, ending its longest winning streak since 2004 as investors monitored the latest developments on global trade. Dow Jones was down nearly 98 points and the tech-heavy Nasdaq also slipped by 133 points. CNBC's Julia Burstein gets us a wrap of all the action on Wall Street.
U.S. markets were down in Monday trading as fresh trade uncertainty weighed on investors. The Dow shedding 99 points, the S&P 500 down 36 points, and the tech-heavy Nasdaq falling 133 points. President Trump is proposing a new 100% tariff on movies made outside of the U.S. In a social media post late Sunday, the president said foreign film production posed a, quote, national security threat. It's unclear how the president intends to implement the duties, and the White House said today that no final decisions have been made on these tariffs on films made outside the U.S., but that the administration is, quote, exploring all options to deliver on President Trump's directive. And OpenAI is abandoning plans to become a more conventional for-profit company, announcing that it will restructure as a public benefit corporation, which will allow the nonprofit that currently controls the AI giant to retain its management of the company. Chairman of the board Brett Taylor and CEO Sam Altman saying on Monday that the decision was made after hearing from civic leaders and engaging with the attorneys general of Delaware and California. That's what's happening here in the U.S. Back to you in Mumbai.
Thank you so much for that. But keeping it with the U.S. markets, U.S. Treasury Secretary Scott Bessent says that some trade deals might come as soon as this week, with Trump administration receiving very good trade proposals from other countries. Now, speaking to CNBC from the sidelines of the Milken conference, he clarifies that China tariffs are not sustainable and both sides have not yet been talking. Listen in to what he had to say.
I think we're very close to some deals. As President Trump said last night on Air Force One, maybe as early as this week. So when you think about uncertainty, uncertainty, a lot of it is generated by, I have asymmetric knowledge, so I'm not uncertain because I think it's going well. Other people don't know what I know. So
well, you'd have to share that with us then.
Well, I can say that I am highly confident that we have 18 important trading partners. We'll put China to the side. The 17 other partners, many of them have approached us with the very good trade proposals. President Trump is going to be involved in all of those. He will be the final decision maker, and we'll see where that goes. I think we could see substantial progress in the coming weeks. We'll see. That I think it's Stein's law, that which is not sustainable doesn't continue. So 145%, 125% tariff levels are the equivalent of an embargo.
Yep.
And we're reading every day what's happening with factories in China. And from an academic point of view, I can tell you that the history of trade battles, we are the deficit country. The surplus country always has the most to lose.
All eyes are on the Fed policy decision due Thursday. This is Federal Reserve's first policy meeting since President Donald Trump announced reciprocal tariffs in early April. Nick Timiraos, the chief economics correspondent at Wall Street Journal, talks about how Trump's comment on Federal Chair Jerome Powell is likely to have no effect on the upcoming policy decisions. Let's listen in.
I thought the most interesting comment in that interview, apart from the point that he is not going to try to replace the Fed chair, notwithstanding his terminate comments of a couple of weeks ago, was when he said, I wish the people that are on the board would get him to lower, because I think that shows that just changing the Fed chair does not change monetary policy. This is set by a 12-person committee. There is nobody on the rate-setting committee right now who wants to lower interest rates. And so, this is how the president thinks he can get the monetary policy he wants, by badgering the Fed, by making very public statements or criticisms about what he thinks interest rate policy should do. But ultimately, that isn't going to move the Fed if the arguments aren't good enough. And right now, the Fed thinks they still have some inflation risks, especially because of these tariffs. So that's why they're going to sit on their hands here.
Okay, let's also get you some views on the U.S. economy and the trends in the U.S. dollar from Timothy Moore of Goldman Sachs.
Larger picture is that the trend in the U.S. dollar has clearly shifted. Our currency strategists have moved very much in that direction. And the salient point here is that we're starting from a position of very significant overvaluation in the U.S. dollar on longer-term fair value metrics, as concerns about U.S. economic growth come into play, which may mean the Fed may cut rates to a greater degree than was anticipated at the beginning of this year. If you have some shorter-term factors that might drive U.S. dollar weakness, then the longer-term starting position of significant overvaluation means there could be farther to go in that adjustment process. Currency strategists reckon that the dollar is about 17 to 20% overvalued, so there could be significant move to the downside.
And let's get to the final update on the global market front this morning. European markets, they had closed mixed in yesterday's trading session. They started mixed also as well. So with FTSE closed for a bank holiday, we had, as investors were looking ahead of the latest economic data and corporate earning reports that were due this week. The German DAX ended 1% higher almost in trade, while the French CAC fell more than 0.5% in yesterday's trading session. So that is something that we'll be keeping an eye out on. But that's the global market wrap that we have for you all this morning. And Vamakshi, it's in muted handover that we have for the Indian markets as well.
Well, absolutely a muted handover coming in from the global markets. But that was all on the global market action. But how will all of these overnight cues impact our own Indian markets? We now have our research team joining in with how the trade setup looks like and the stocks that are likely to be in the news. First up, we have Hormaz joining in to get us all the cues from the market space that we need to watch out for. Hormaz, good morning.
Kamakshi, good morning. And it was a cautious handover on expected lines heading into a major event being the FOMC policy, and of course the cautious tinge is percolating onto our own markets as well. But for us, it has been that case over the last 4 to 5 trading sessions, even though we ended higher yesterday, but a similar script following, failing to hold at higher levels. What may also keep the sentiments in check today, of course, are the rising tensions at the India-Pakistan border and the Ministry of Home Affairs ordering a civil defense mock drill across 244 districts tomorrow. So that may keep sentiments in check, and that is evident from the GIFT Nifty as well. Now, what's also indicating caution is that yesterday we made a lower high on the charts when it comes to the Nifty, as yesterday's high was lower than that of Friday's high. We did cross 24,500 yet again, but failed to sustain at those levels. So that becomes the first level to cross, then followed by Friday's high on the upside. On the downside, though, it is yesterday's low of 24,400 that comes in as the first line of defense, followed by last week's lows, which include the likes of 24,290 and then 24,038, which was the low of last week. Of course, on the Nifty Bank, it ended below the 55,000 mark, but what kept the losses in check was HDFC Bank, which stood tall and withstood pressure from all other banking heavyweights, be it Kotak, be it ICICI or Axis, and it was HDFC Bank that ensured that the Nifty also ended in the green. The earnings season continues. Keep an eye out on the wires and cables companies, and also watch out for Tata Motors today as the shareholders vote for their CV business demerger. But for now, a cautious start in the offing.
Okay, cautious start is what we're watching out for today. But now over to Ria, who's here to tell us what are the important stocks to watch out for in today's trading session. Good morning, Ria.
Well, yes, let's take a look at the stocks that are going to be in focus today. First up, we have Coforge on the back of its Q4 numbers. Now, the net profit has increased by around 21.2% sequentially. Even the rupee revenue has gone up by around 4.7%. Margins this time around have come in at 13.2% versus 11.9% that we saw in Q3 of FY25. For DCM Shriram, the net profit and the EBITDA both have seen increases of around 52% over the previous year. Even the margins have seen an expansion coming in at 14.1% versus 11.1% in Q4 of last year. For IHCL, the revenue has gone up by around 27.3% on a year-on-year basis. Margins have come in at 35.3% versus 34.6% in Q4, so largely stable margins for IHCL. For CAMS, the revenue and EBITDA have seen increases of around 14.7% and 11.2% on a year-on-year basis. Margins, on the other hand, have contracted a little bit to 44.7% versus 46.1% in Q4 of last year. For J&K Bank, the net profit has gone down by around 8.5% on a year-on-year basis, but the net interest income has seen an increase of around 13.3% over the previous year. Shifting away from earnings, IEX has come out with its business update for the month of April. The traded electricity volume has gone up by around 26%, and the real-time electricity market volume has gone up by around 48% over the previous year. 2 pharma stocks will be in focus today. First up is Glenmark Pharma. Now, Ichnos Glenmark Innovation has received the US FDA Fast Track designation for ISB 2001, and Sonoris Pharmaceuticals will be in focus since they have acquired the US FDA approved ANDA for topiramate from Wockhardt. For Paras Defense, the stock will be in focus since they have signed an MOU with an Israel-based company called Heaven Drones to form a JV in India for the development and production of logistics and cargo drones for defense and for the civil market as well. And lastly, Cyient will be in focus since its arm Cyient has received an order levying a penalty of around $26,779 from the IRS in the US.
Well, thank you so much for that, Ria. That's quite a comprehensive list. And finally, we now have Mangalam joining in with cues from the F&O space. Good morning, Mangalam.
Good morning. So if you look at the Nifty, it is consolidating around higher levels. We're facing some supply over 24,500. We've been facing supply about 24,450 to 24,550 over the last few trading sessions. And yesterday, even as we closed about 114 points higher, we actually closed about 60 points lower from the day's high itself. And the bigger culprit was the Nifty Bank led lower by Kotak Mahindra Bank and SBI. No problems with the broader markets. They continue to do well. But overnight, the developments at the border have kept the GIFT Nifty gains in check, along with the weakness that we've seen on Wall Street itself. GIFT Nifty suggests an absolutely flat start. The only worry is, are the flows getting a little too lopsided now? Because it's the 9th session where both the FIs and the DIs are bought together. The FI has bought 500 crores and they've bought for 13 sessions in a row. The longest streak since April, May 2023. In fact, in just the last 13 sessions, the FIs have gone ahead and bought $5 billion in cash market. That's the highest continuous purchase that we've seen all the way since November, December 2020 itself. So that's the question. Even on the index futures side, if you look at the Nifty futures premium, yesterday itself, it jumped from 54 rupees to around 92.5 rupees. And the FIIs continue to buy in index futures. They bought about 530 crores, added about 2,900 longs, covered 717 shorts. And with that, nearly all the shorts are out of the system. The FII contracts on the short side are sub 5,000 and their long exposure is now at an even 49.51 is their long short exposure right now. The 24,500 call writers fairly active, telling you levels upwards of 24,550 will continue to face supply, but at lower levels, we might see some support around 24,300. But if there were any further downsides on account of border-related issues, there have been a lot of put buyers at 24,000 itself. So that's something we'll keep an eye out on. Also watch out for Manappuram. That stock entered F&O ban yesterday.
Thank you so much for that, Mangalam. But on that note, we're going to slip into a very short break and we'll get you the latest updates where India and Pakistan relationships stand. Stay tuned.
Welcome back. You're watching Power Breakfast on CNBC TV 18. Let's get you an exclusive now. GST authorities have turned up heat on global digital service providers. As the digital economy surges in India, the GST authorities are now ramping up enforcement efforts to bring foreign digital service providers under the tax net. Timsi Jaipuria now gets us all the details. Timsi?
As the digital economy surges in the country, the Goods and Services Tax authorities are ramping up enforcement efforts to bring foreign digital service providers under the tax net. Even after already having significantly expanded the definition of online information database access and retrieval, that is OIDAR services, in October 2023, CNBC TV 18 has now learned through sources that the Directorate General of GST Intelligence is still coming up with cases where such platforms and entities have not registered in the country and thus are neither reporting business generated from India and nor they are paying the due GST. Keen on bringing these foreign digital service providers under the GST net, DGGI is now pushing for registration, higher compliance from these online platforms which are not registered in the country. In its efforts, sources said the DGGI is sending emails and warnings to Indian firms that are using these foreign platforms seeking compliance. DGGI, which is the enforcement arm of Center for GST, is also asking Indian payment processors to block payments to these non-compliant foreign firms. Not just this, DGGI is also accessing forex transaction data from banks and has also sought aid from the Reserve Bank of India to enforce cross-border compliance. DGGI is also seeking suitable amendments to the law to empower itself so that the agency can take action against such non-compliant websites. Just to remind our viewers, the GST mop-up from these online services has grown up from 80 crores in FY18 to over 2,600 crore rupees in FY24. Meanwhile, experts attribute this growth to the broader scope of taxable services, the change in definition which actually came in October 2023 through amendments. Now to be seen is whether this DGGI action against non-compliant online service providers actually garners some more fruitful returns or not, something that we'll have to wait and watch for.
Thanks so much for that, Timsi. But let's move on. Nearly 2 weeks after the Pahalgam terror attack, India has curbed the flow of water to Pakistan through the Chenab River. Sources say that authorities have emptied the Bagliha Reservoir and shut the gates. Authorities claim that the water from Chenab River will not flow into Pakistan's Punjab province via the dam till India refills the reservoir. India has already suspended the decades-old Indus Waters Treaty with Pakistan. The Home Ministry has also asked several states to conduct mock drills to strengthen their self-defense preparedness, and the last time such a drill was conducted was in 1971, the year in which India and Pakistan went to war on two fronts. Parikshit is joining with us to give us more on this front. Parikshit, tell us more about these mock drills and its significance as well.
The Ministry of Home Affairs has ordered several states across the country to carry out mock drills on the 7th of May. This is to prepare ourselves in the wake of a hostile attack. Now, these measures have been recommended by the MHA. On the 7th of May, we will see exercises, drills across the country for operationalization of air raid sirens, training of civilian students on civil defense aspects to protect themselves in the event of a hostile attack, provision of crash blackout measures, and also provision for early camouflaging of vital plants and preparation for evacuation plans. Now, all of this can be seen as part of contingency planning on the part of the Government of India and the Defence Forces. We've been seeing since the Pahalgam attack regular meetings at the Ministry of Defence. The Prime Minister has been meeting NSA, Ajit Doval, the Service Chief, the Defence Secretary as well. So the feeling is, yes, that we have to respond to Pakistan. We need to retaliate for that terrible attack in Pahalgam where 26 people were killed. But at the same time, our response has to be a calibrated one. It has to be a responsible one considering India's stature. But at the same time, we need to be prepared for any eventuality. So this is how you would describe this mock drill. It is part of contingency planning to prepare our civilians, to prepare our forces in case there is any kind of hostility, despite our restrained and measured response to Pakistan.
Thank you so much for that, Parikshit. But let's slip into a very short break now. Up next, we get you news and updates revolving around US President Donald Trump in a special segment, Trump Watch. So don't go anywhere.
Welcome back and thanks for staying tuned into Power Breakfast on CNBC TV 18. Now getting you the latest on Trump-related developments. We have Dia joining in with us as always in our special segment, Trump Watch. Dia, over to you.
Starting off with a significant move in US-India trade talks, India has proposed zero tariffs on steel, auto components and pharmaceuticals on a reciprocal basis up to a certain quantity of imports in its trade negotiations with the US. People familiar with the matter said, adding that beyond this threshold, imported industrial goods would attract the regular level of duties. Turning to the auto sector, Ford suspended its full-year financial guidance and said President Donald Trump's auto tariffs will take a toll on profit, joining rivals stung by volatile global trade policies. The automaker expects the duties to reduce 2025 adjusted earnings before interest and taxes by about $1.5 billion on a net basis this year, it said, while reporting a first-quarter profit that beat expectations. The company's total tariff impact is about $2.5 billion, $1 billion of which the company expects to offset through actions such as using so-called bonded transportation to shield parts from levies as they cross international borders, Chief Financial Officer Sherry House told reporters. Now, moving on, President Donald Trump signed an executive order looking to limit federal funding for gain-of-function research that involves altering pathogens, suggesting the efforts could have been responsible for the outbreak of the COVID-19 pandemic. US President Donald Trump said he wanted to work with Turkish President Recep Tayyip Erdogan to end Russia's invasion of Ukraine after the two leaders spoke by telephone. Trump added on his Truth Social network that Erdogan had also invited him to visit Turkey and that the Turkish leader would be meeting him in Washington. Trump, who promised to end the Ukraine war within 24 hours of starting his second term in January, has been pushing Kyiv and Moscow to reach a ceasefire deal. The Trump administration is offering undocumented migrants $1,000 and paid travel if they agree to leave the U.S. voluntarily. The latest effort to ramp up mass deportations and slash enforcement costs. The Department of Homeland Security said migrants who self-deport using the CBP Home app will receive the stipend once it's verified that they have returned to their home country. That's all for today. Now back to you, Vinny.
Thank you so much for that, Dia. But that's all the time we have on this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next to Bazaar Morning Call.